Johnson Johnson earnings and revenue topping estimates. The company raising its revenue guidance. Joining us now, J&J CFO Joe Wolk. We'll start. Joe, it's good to see you in studio. To start, with a look back at the quarter, the highlights, even if there are any lowlights, I guess you can talk about those as well.
Yeah, it's a pleasure to be here with you, Joe, in studio, Kelly and Andrew as well. It was a great quarter by all accounts. If you look, the revenue beat, the EPS beat was pretty significant. We were sitting here this time last year, and I think the investment community was wondering, would we be able to produce enough progress in our pipeline to actually offset the biosimilar competition that was going to come from one of our major products, over $10 billion, Stelara, which treats psoriasis and ulcerative colitis and Crohn's disease. We are clearly doing that, and it wasn't a perfect quarter. MedTech was our toughest comp of the year. We did predict in January that we'd have second half performance better than first half. We were able to manage EPS, and while the guidance number is the same as the midpoint 1060 that we issued in January, there's a lot more that meets the eye, I'd say, with that guidance, because we're taking into account two things that, with the benefit of some FX favorability, covering headwinds that we didn't anticipate in January. The first is an acquisition that we closed on April 2nd, known as Intracellular Therapies. It's really going to add to our neuroscience portfolio and establish our leadership in that particular space. That was 25 cents dilutive, so it's going to be a great acquisition long term, but this year it was a 25-cent dilutive item, mostly due to financing. The second piece we built into our guidance was about $400 million of tariff costs, based on what we know today, the programs in place, the timing that's accounted for. So it was really a pretty healthy beat, considering we didn't have those things in January that we're now absorbing.
You're going to build $55 billion
That's correct.
In U.S. investments over 4 years. We've had this discussion. Was that already planned? Does it have anything to do with some of the steps the new administration has been taking, or just the general way the country wants corporations to do things at this point?
Well, listen, Johnson & Johnson's been, we were founded in New Brunswick, New Jersey. We've been here for 138 years. It's where we want to be because we can tap into the innovation ecosystem, the educational system. It's when President Trump or any other luminary describes Johnson & Johnson as a great American company, it's a great accolade, but we take a certain responsibility with that. So the $55 billion, I would say, is more the product, here we are on tax day, of the 2017 tax reform, right? When you think about what was done there, in 2016, there was two spreadsheets I would look at. One had a U.S. facility being built with a 35% tax rate plus state tax versus some other country that had a 10 to 12% rate with additional incentives to take that effective tax rate lower. Look what the industry has done since then. According to the Washington Tax and Public Policy Group, there were about 1,100 biopharma facilities in 2016. Today, there's about 1,600. So we need to kind of gravitate that conversation to the next dollar invested in terms of building manufacturing facilities. It takes 4, 5, 6 years to build a pretty exquisite biopharmaceutical facility. But the next dollar invested with good tax policy really helped bring jobs here. We have more facilities in the United States than any other country in the world.
And you made that point during the election, as one side wanted to raise corporate taxes, right. And you said that you mentioned a specific facility that would not have been built if the 2017 Tax Act.
We just broke ground in North Carolina, Wilson, North Carolina, drug substance.
How big? What's the investment there?
That's going to be about $2.2 billion. It's going to add about 500 jobs to Johnson & Johnson, but the state of North Carolina has made estimates that for every job we add, they're adding about 4.
So what about tariffs on imported pharmaceuticals?
So, last night, I guess there was some news with respect to Section 232 coming out. That's around national security. If you look at that, and I don't want to speculate, I want the process to play out, but any countries of interest around national security, I think you're going to land in an assessment that concludes you to believe that it's mostly generic products, generic pharmaceuticals that are coming in, which, by the way, 90% of prescription drugs today in the U.S. are generic, right? The other thing that might be are precursor materials, so those chemicals such as hydrochloric acid, magnesium, that help synthesize the therapeutics that we make. Us and our peers are more into the high science, the bispecific antibodies, the CAR T therapies. That's where we kind of, I'd say, have a differentiation. And not only is it good for our business, but it provides America, I think, with a competitive advantage in terms of leading the world in life sciences.